Thank you, GCC Forum, for inviting and assembling such a wonderful panel and the audience. Really appreciate the effort. And our panel today will be about data, AI, and infrastructure. So my prime focus is supporting companies with AI-led transformation, but also I'm here in the capacity of allocator, since I'm very much interested in focus on the cross-border investments. And I want to mention that data and infrastructure is such an important topic, and the Gulf and the cooperation between the UK and the Gulf is important not only from the deployment perspective, but it's also a strategic partner and as well like a source of capital, and that's why we want to focus our conversation around like what is being invested, why, and compare the markets here and in other regions. And I start with introducing briefly the focus of each of our panelists. I will start with Bruce, who started his career in the Wall Street. He's an engineer by training, but for the last I want to say 3 decades, has been advising companies and individuals on allocating into energy sector. And maybe you can have a few words about like what's your focus, what you do.
Thank you, Olga, and delighted to be here. So at Alexa Capital, our whole focus is, we're a specialist investment bank focused on the energy transition. We're mobilizing capital across energy infrastructure, predominantly renewables, but infrastructure at large, predominantly across continental Europe and the UK. We do a bit of work in the US as well, growth equity, structured finance, M&A, and quite a bit of infrastructure financing today that is flexibility, flex-gen batteries, and powered land for AI. And I'll talk a little bit about that in due course.
And Tiago, he has a strong background in corporate finance. He spent like a number of years in Barclays before establishing his own company. And he focused on supporting investors with due diligence valuation and with everything that is happening post-transaction. And maybe you can mention what is your focus in relation to data and infrastructure.
Sure. Hope everybody can hear me well. Thanks a lot, Olga, and thanks a lot, for organizing this conference. So my name is Tiago. I'm the CEO and founder of LGG Advisors. What we do is we provide, consulting and team augmentation support for firms in the financial services industry, mostly, investment firms and also advisory firms. And now, obviously, with the theme of AI in the past year or so, we've been also incorporating a layer of AI in all our processes. So in a way, we can say that we are a team of corporate finance M&A professionals supercharged by AI. That's basically what we do.
And we have another investor on our panel, Anthony. Currently, they have 3 billion under assets under management and very much focused on growth strategies and climate. And maybe you can add a little bit more to that.
Yeah, so Anthony Doeh, partner at Princeville Capital. We're a global growth equity firm. We generally invest in tech companies. That's really all we've done for 10 years that Princeville's been in existence. And it's very interesting in the data center space, which typically has been thought of as an infrastructure asset class. But because of such high growth that the industry's been experiencing, we've been able to identify opportunities that fit our mandate of basically tech and venture growth returns, which historically is not something you saw in the industry. So very exciting time in data centers.
So, and now if we are turning to the core topics of our discussion, so infrastructure is being built, capital is being allocated. So if you look across like the both private and public markets, like NVIDIA is investing heavily. If you look at the private equity firms like Blackstone, they're allocating significant amount of capital into infrastructure. So my question is, if we look from the UK perspective, there is a number of constraints, in terms of greed, in terms of the lag, in terms of what is being funded. And the question is like, how complex is the reality from your perspective, Bruce?
Yeah, so it's I actually put a piece out on Substack yesterday, which is entitled "Mind the Gap" or "Mind the AI Gap," and it refers to this structural challenge that we have a technology market that is moving on 12 to 24 month product cycles, and a grid infrastructure that's moving on 7 to 10 year development cycles, and there's a massive gap in between. And so the challenge and the implication of that in a world, and let's take Olga, your example of here in the UK or across continental Europe, where our price of land is typically much higher and our price of energy is 2 to 3 times what it is in the US or China, and we've got big permitting challenges. We've got a really big development demand and a big development challenge to implement that infrastructure in this region. And what does that mean? The implication is that the developments, and we've got developments running in Iberian Peninsula here in the UK and Ireland, where the infrastructure is no longer prepared to wait for a long grid queue, wait for the lengthy regulatory challenges of trying to connect with our public infrastructure. And so we see a market that is moving into, we call it island mode or private wire, but the infrastructure is moving to deliver this data center infrastructure, processing infrastructure. The infrastructure has got to include energy powered land investment, and so it's a critical need to deliver the backup, not just the backup, primary power, backup power, batteries, grid connectivity, and where the public grid is being used almost as a backup to the primary power requirement. And I could go through a long laundry list of requirements, but that does mean that you've got to have typically sizable brownfield land, multiple grid connections for backup. You've got to have access to water for cooling, and you've got to be close to the fiber connectivity so that you're in a low latency delivery capability. So a whole laundry list of sort of a perfect alignment requirement of development challenges that means that we're in a market on this side of the pond where we're building inference rather than large language models. We'll probably build a bit smaller and more distributed, and it's a pretty challenging environment. So there's a huge hype. There's a lot of no shortage of capital, but the challenge is the alignment of all of those underlying development requirements.
And I think that given what is happening on the ground, probably the next follow-up question will be from what you see, what kind of projects are being funded, like who is providing this capital and how the transactions being structured.
Yeah, and so this is not generalist capital that's flowing in, because the procurement requirement for the FANGs, the Facebooks, the Amazons, the Apples, and Microsofts of the world do know that they need trusted partners to deliver and to deliver on time. It's all about it's all about time to market. To do that and deliver that, we've got the capital has to be intelligent capital. It has to understand all of those requirements to deliver on time, which is to see we're seeing the emergence of a whole host of we call it electric land or powered land specialists who are bringing together that toolkit, which is all the underlying, not just the development requirements around the land, grid, planning, but there's connectivity requirements that are about connectivity to the fiber, and working with that big data center company to be able to deploy and roll out. And that means that these electrified land platforms are really power utilities. And they will be developing as much power on site and actually connecting and being generators or suppliers to the grid. And so it's almost like turning the clock back to the time of Thomas Edison, when power utilities were all built around industrial estates. We're going to see the dismantling of these big national power utilities to the delivery of a number of local power utilities that are, call it industrial estate specific, and a whole host of customers that can connect into that industrial estate conurbation. So we'll, in some respects, our view is that the traditional utility model will be turned upside down on its head.
And Anthony, you are a very active investor and constantly looking for the new projects and companies to allocate. And I have two questions for you. So I know that we were just chatting about like one of your use cases, day one. So maybe you can touch on that. And when you're looking like from what you are being funded, what are the cases that surprised you the most, and what you think is still needs to be priced like more cautiously?
I mentioned earlier in the intro that we've seen this period where data center investments have had the potential to deliver technology venture-like returns. So in the case of day one, we've invested about 170 million in the company across 3 rounds of financing. They're getting ready for an IPO. We expect this to be a kind of 5-6x return for us in the space of about 2 years since we did the first investment. So incredible returns in an asset class that historically was considered rather boring, very steady, predictable, but usually would be delivering low single digit, or low double digit, or maybe even high single digit IRRs. And the reason that the infrastructure funds are not just jumping on those opportunities, bidding the prices up and the returns down, is because those companies are growing so fast, and because a lot of the operators that are new into the sector. So you've seen this huge gold rush because there's been a massive shortage of compute and data center capacity that the hyperscale customers in particular are demanding. And a lot of players, whether they used to be Bitcoin miners, whether they are experts in construction, that did not have a background in data centers, suddenly became experts. The one that we backed, this company day one, and why it's been so successful and will continue to be so successful into the future, is that they've been doing this for 25 years. So the management team of day one were the founders of China's largest data center company, a business called GDS. They saw the opportunity, led by demand from their clients, to establish a company outside of China. So it's headquartered in Singapore. It has no connection to China. It's fully international. It's operating now in 6 markets in Asia, and it's active in Europe. They have a big presence in Finland, and they're entering Spain. And really, it's the excellence of the management team that allows us to underwrite with confidence that superb execution of the growth opportunity. And I think a lot of companies are delivering on the short-term execution opportunity, ramping up contracts, ramping up revenues and capacity, but they may run into challenges over time where we expect this business day one to be very lasting. And then you asked, Olga, about surprises on the upside and the downside. So the great thing with this particular investment is nothing has gone wrong so far. There's been no downside surprise. The biggest surprise has been how much they've grown, because they've grown faster and continue to just pile on contracts and then execute against them. All the execution challenges that Bruce described, which would slow down, could impair, could hinder a growth path for a data centers company. This company, day one, has just like really chomped through those and continued to grow very, very fast, constantly outperforming their own management cases. So, like we said, there are always challenges along the way. It's the power is the big one that you talked about, the permitting, the cooling, the government. They do a lot of work with governments to establish these large hyperscale campuses. And I think over time, all of those things around how AI is delivered, regulated, managed by governments, managed between the public sector and the private sector, and so forth. And the data centers will have to evolve over time with the technology. Already it's been a shift from cloud into AI capacity, and then that will continue to evolve as AI infrastructure technology evolves.
I think like we touched on what are the criteria and what is being funded. Bruce, like thank you for outlining, and clearly there are some great success stories like with your investment. And Tiago in his work, so you actually work as a corporate finance extension arm for like the PEVC, but also for the corporate. So what do you see, what happens post-acquisition, and how much value creation is down to digital work to ensure that we'll have more exciting cases like they are one with Anthony?
So I have less visibility on the investment side as here, Anthony and Bruce. I have more visibility on the adoption side. And first of all, I think it's very exciting for all of us to live in this era, which is probably comparable, to the, industrial revolution, where so much disruption is going to happen, and where industries and companies are going to fundamentally change. And on the adoption side, what do we see? We see companies wanting to try to gain a competitive edge by using AI, but we also see a lot of hype that does not correspond to reality. So particularly in financial services, we have 80% of the firms saying that they're using AI in their day-to-day, but less than 10% of those are saying that they're seeing cost savings as a result of using AI, and less than 5% are saying that they're seeing an increase in revenue that comes from the use of AI. So why this discrepancy between hype and reality? I think it's a couple of things, right? One of them is, first of all, we need to allow time for the technology to develop. I think we've seen incredible things incredible use cases, that come from AI, but there's still clearly a lot of room for improvement, a lot of, advancements for the technology to bring, its full potential. But also I think it's also related to the fact that AI, when we speak about AI is actually multi-layered. And you have the first layer, which I would say is more at a superficial level, which is using, off-the-shelf tools or using LLMs, as I'm guessing, most of us use, like Claude and ChatGPT. And that certainly helps with productivity, but where the biggest gains in productivity lie are, 1 and 2 levels below that, which is, 1 level below is being able to create AI agents to fully automate, certain work streams. And then 2 layers below that, I would say, is, having a team or an army of AI agents being able to work coordinated by an AI orchestrator. And so we go from 1x productivity, which is what we're having today, to probably 20x productivity, which is what we're going to have when we are able to fully utilize a team of agents orchestrated by an AI orchestrator. And so particularly in private equity, since we're not in the era of cheap money anymore and deals are extremely competitive, where I see the benefit is in value creation through the usage of AI. So where I see everybody trying to make a move is to make their portfolio companies more AI savvy and be able to harness the potential of this technology. But I think the lesson here is for businesses to be truly AI native, they need to embed AI in their infrastructure. So it's not just using an LLM or not just using an off-the-shelf tool. It's rethinking their business model as if they're starting today from a blank sheet of paper and thinking all their functions, back office, middle office, front office, as AI native businesses, and understanding, where can AI automate certain processes and where do you need to have a human in the loop to perform, things that obviously will never be automated by AI, nor do we want them to automate, like, negotiation, relationships, and other things that are obviously human and judgment led. But that's basically what I'm seeing today.
So thank you so much, and probably as a very last question to everyone, and if you can briefly 1 minute answer each, giving your experience from finance provider, the investor, and the advisor working post-acquisition. So where do you see the biggest area of focus that should be from your perspective, given the fact that AI, data, and energy is the matter of sovereignty and national security?
Very simply, this data sovereignty aspect is going to be a really big part of deployment. To deliver that, one needs low-cost competitive energy. I think we're already beginning to see the pricing of tokens, and we'll probably have those tokens bid up, and we'll find that the operating costs of this infrastructure is more significant than what we're paying today. And so there's not only a national security consideration, which flows through everything to how we defend our borders and defend sovereignty, to how do we drive our economy, and it's got to all come back down to how do we deliver the energy infrastructure for this infrastructure and ensure that we can deploy this infrastructure in every sovereign region. So there's a huge deployment opportunity, but there's a huge, an enormous need to make sure we do that efficiently, effectively, and with competitive energy, because this compute is about energy, and energy is core to security. And so I think we're all in a big infrastructure loop, and we're going to have to mind the gap and close the gap as we think about how we roll the infrastructure out over the next 2, 3, 4, 5 years.
Thank you. Anthony?
Yeah, so I think Tiago put it well when he talked about AI as an industrial revolution, huge disruption to the world. And I think what that really means is massive gains to the winners and massive disruption and losses to those who don't adapt to AI. We've already seen that, in a sense, in valuations with the likes of OpenAI, Anthropic, and SpaceX getting ready for IPOs that amount to about $4 trillion in expected or current private value that's set to go public. And there's been a huge value disruption on the public stock market and the software companies that historically were considered very sticky, stable, and have seen huge compression in their valuation multiples and their market caps because they're expected to suffer at the hands of the AI companies. So if you extrapolate that forward, every company, we focus on tech companies, we look to back winners that, of course, are going to be the beneficiaries of this trend. Is a huge investment opportunity for our funds and our LPs. But it's something that every company, not only tech, but traditional companies, really need to have a successful AI strategy. And that's really at the corporate and the investor level. But I think at a society level, it's also a huge trend in the workplace, in education. Many of us started our careers before being investors in investment banks, and we were in huge classes of hundreds of grads that those banks would hire every year, and they're not going to, they already stopped, I think, hiring these massive classes because they said we don't need so many analysts anymore. So banks, consultants, law firms, it's, that's one example, but massive disruption to the way that everybody will be living and working.
That's a good point. I spoke briefly about what I see happening at the portfolio level, right? But also at the fund level, there's also quite a lot of disruption happening. I totally agree with Anthony. Today, the traditional banking skills are becoming commoditized, right? What the days we used to spend like preparing a pitch book, preparing a deck, a financial model. Those days are basically over, right? I think that part is going to be greatly streamlined. You still need, a human in the loop to do quality control, review, put insights on top, add value. But the data gathering and analysis is going to be greatly streamlined, right? So I think the great challenge, for funds, because I'm guessing this is mostly the audience we have here, GPs and LPs, is really making sure that their team is properly trained to be AI native. So the banking skills are not enough anymore. Either people are really proficient using AI, or there's a very famous saying that I'm sure all of you have heard. You won't be replaced by AI, but you will be replaced by someone that knows how to use AI. So for those that don't know how to use AI, they are definitely at the risk of being replaced. So even for some of us that have been in the industry for quite a few years now, it is important for us to make sure that we fully understand the impacts of AI at an investor level, origination and execution also. Yeah.
So thank you for the great summaries. I also would like to thank you to the audience, and if you can give a round of applause to the panelists for the great conversation.